We are speaking with Dr. Wade Locke. Welcome to the show, sir. How are you?
I'm fine, sir. Yourself?
I'm good. I'm waking up.
You sound chipper, yeah.
Smoke and mirrors. Dr. Locke, welcome to the show. I hear that you're interested in speaking about oil prices. Now, this may have been something you and Patty had wanted to set up, but I'm very eager and anxious to speak to you about this. I know also you are part of the new panel for fracking, but why don't we start with the price of oil? What the heck is going on?
Well, we've got an increase in supply and a decrease in demand, and we've got people who are playing chicken, I guess, to some degree. I mean, what we do know, let me say the following, is that the price that's needed by people like the Saudis and other OPEC countries are above where it's at now. Right? I mean, we're looking at a little over $84 a barrel right now. Mm-hmm. They're in the 90s. So that's not sustainable without incurring huge deficits, and I can't imagine that that it would be in their interest to cut the services to their population. So if they can't cut services and they can't keep running deficits forever, then they're likely to react at some point.
Quite interesting. I'm sure that they have much more money in the bank than most of us do. I mean, the members of OPEC probably have a bit more put away for rainy days, but you're right, you can't just continue to operate at a deficit.
Well, Venezuela are running into problems with their bonds. They may default on their bonds. Venezuela's a member of OPEC, just so you know, and that was at $100 a barrel. So I'm sure they're finding a big squeeze right now. There's a lot of things are happening, right? I mean, the other thing is that the costs have gone up as well for drillers. I mean, so in terms of the shale, the costs are going up, and so you know, if the costs are going up and demand is going down, prices are falling, and if prices keep falling, then what will happen is that as a result of the prices being below the marginal cost of extraction, you'll see supply falling back because people won't invest as much in the projects. So a lot of projects can't go forward at these kind of prices, right? If you're already operating, then you're operating, but a lot of the marginal projects can't go forward. Certainly, and that's true for some of the shale as well.
Why is it that now, when we are in a time where we're seeing a clawback or a drop in demand for iron ore as well, are we experiencing such a dip? Is it because there was a huge amount of construction and industry demand 5 to 6 years ago, and China has just bought up as much as they need? Dr. Locke, why is there a drop in demand for oil specifically, and where is the demand dropping so much? I mean, where was the big business that no longer wants it? Where's the hole?
China and Asia are the big part of the issue for us. I mean, the other parts happen is that when you had elevated prices for iron ore or for oil, then it increased supply. So Australia and Brazil put more iron ore in the market, and it has kept the prices down low, really low for iron ore, to the point that you're unlikely to see projects developed here, additional projects, until prices go back up. For oil, what's happened is that demand never recovered as fast as people thought it would. As a matter of fact, recently the IMF lowered demand yet again, right? The demand forecast yet again. And so we had the worst of all possible situations for the price of oil we've had a fall in the demand as well as an increase in supply. But right now we have a short-term price that is below the marginal cost of extraction. So some projects, like in the oil sands or in the Balkans or in Balkan or in Texas or in Wyoming, won't continue to be able to keep going. And so we would expect that supply may fall back in the short term.
Okay.
Right? And there will be an adjustment. I mean, come November 27, when the OPEC meets, there will be a clear signal of what's going to happen here. This doesn't look sustainable to me, and we expect prices to start to go back up at some point in the future. That doesn't help us right now. I mean, we have a situation where prices are significantly below where we thought they would be at the budget time. There's no doubt about that. And that creates problems in terms of planning. And
it certainly does. I'm kind of confused, and maybe you can help myself and our listeners understand this a little bit better. Our current finance minister of the province, Ross Wiseman, who's a very intelligent individual, and obviously did not write, or he was not behind the budget that the government is operating on currently. And, it was based on $105 US a barrel. But Minister Wiseman has said publicly that the impact of lower oil prices is going to be balanced out by the change in the exchange rate. So therefore the province is not in as bad shape as it should be. What the heck does he mean that oil prices, the lower oil prices are balanced out by a change in the exchange rates? I have no idea what that means.
Okay, what it means in plain English is that the lower is the number of U.S. dollars it takes to buy a Canadian dollar.
Okay.
The higher is the effective Canadian price, okay, that we receive. So just to do it in easy terms. So if U.S. dollar sells for $1 to Canadian, okay, so then you say, okay, $100 barrel is $100 barrel, right? Mm-hmm. So $100 U.S. is $100 Canadian. So we get $100, okay? Mm-hmm. If the exchange rate is 50 cents, so that $100 US is $200 Canadian. Mm-hmm. So it's as if the price has gone up double for us.
Oh, I see.
So if the oil price falls from 100 to 50, and the exchange rate goes from $1 to 50 cents, we'll still get $100 Canadian, and our royalties are tied to $100 Canadian. So what has happened is that the Canadian dollar has fallen, but not fallen enough to compensate for the fallen price.
Got it. Okay.
So it's mitigated, but not balanced off. I wouldn't call it that way, no.
Not balanced off. Okay, so perhaps balanced out was the wrong term to use from an economic perspective, but it is mitigated. Okay. Well, that makes me feel a little bit better. Thank you for that. So I think you're right. Of course, the oil prices will eventually start to climb, but I think we'll probably experience these sharp dips and spikes more in the future as we see the larger countries and subcontinents continue to industrialize. There will be huge years for resource demand, and then that'll fall off as they start to budget their own projects. Am I imagining things, or could this be the case?
Let me say the following to you, Jonathan. You're right. I mean, Newfoundland, the prospect for Newfoundland in the medium term is positive, very, very positive. We have lots of resources, and lots of resources can be and will be developed. In the short term, this is a problem for us with the price falling. Now, how we deal with that, others will have to make some decisions about, but we should have a discussion around it so that people understand what are the constraints we're facing. And when you talk about diversifying the economy, if there are things that we have not identified and we should identify and do, we should do. But the big impacts in terms of revenue or employment are going to come from mining and from oil. That's the straight kind of thing about it. So we have lots of oil and we have lots of minerals. And over time, when the economy starts to recover, these will be developed here, and it will make a big difference to this province. So we have the potential for further development, even though the short term is a pain. It is a pain, and it is difficult, and someone will have to make a decision on it. I think the decision to wait until we see what the direction OPEC is going to take, is the right one. Nothing is going to change in a substantial way now if we try to make a decision before November 27th. Mm-hmm. So that, in my mind, is the right decision that the Minister of Finance adopted with respect to the mid-year budget. So, let's try to get as much information as we can. This is a state of flux. We don't know exactly what's going on. And we're all trying to do the best we can and try to understand this stuff so we can make the right decisions on a public policy basis so that when we do make a decision, we don't create more disruption than we need to in the economy. Okay. The quicker we make a decision, Jonathan, the more time I give you to make a decision. If I tell you need to lose some weight, okay, if I say you need to lose 100 pounds next week, that's a hard thing to do, and it'll be very disruptive to your lifestyle. If I say you need to lose 10 pounds over the next 3 years, that you can probably manage more, right?
Yeah, that's a good analogy. I like it. So essentially, because we are delaying this mid-year release of information or an update on the budget or the status, you see that as a good and prudent thing, as opposed to those who might say, well, you're not really getting an accurate mid-year statement if you're waiting for things to get better.
It's not a matter of waiting for things to get better. It's a matter of making sure that you know what information on a go-forward basis is the most reasonable information. So right now there's a big uncertainty. We don't know exactly how OPEC. We know what they've said publicly. Okay, we know what they've done. They have tried to protect market share. But, within Saudi Arabia, if you look in the London Times today, you'll see an article where the oil minister of Saudi is being criticized by one of the royal families in terms of allowing the prices to go down as low as they've gone down, right? So right now there's not a coherent group called OPEC that are acting with the same incentives and the same objectives and the same strategies. So until they get their act together, this kind of thing is likely to happen. I suspect, given the implications for themselves, that there will be an adjustment by November where they will start to shore up prices by cutting production. I mean, that's my belief. Now, that may not be correct. And, but waiting from October the 15th to November the 27th is not going to substantially change anything.
Okay, well, you've heard it here, and you know what? I would have to bow to your wisdom as always, Dr. Locke. If you see this as a pragmatic solution as opposed to delaying the inevitable to make it look good, I'll take that under great consideration, and I appreciate you bringing that up. This is a lot to digest this early in the morning for me, and we'll see if others share or disagree with you. But I greatly appreciate you coming on this morning, and I'm going to wish you a very happy pre-hurricane.
Same with you, Jonathan, and good luck with your show.
Thank you so much.
Bye.
Bye-bye.